more on this whole gold rehypothecation thing going on here. All the gold flying back to the United States because they got that audit coming up. You know, we got to see what's in Fort Knox, not just cobwebs. So, this guy is a great economist. He was on that documentary called End of the Road How Money Became Worthless. And I highly recommend that documentary for everyone to go watch that. And yeah, his name is Mike Maloney.
Gold derivatives may become the epicenter of the next financial crisis, but I want to put that in perspective, so I want to read a couple paragraphs for anyone who didn't see that video. Some gold industry observers have argued that there is evidence that the handful of large banks that issue most of the gold derivatives contracts have acted in concert to manipulate the price of gold. An illegal pricing cartel among the banks would not be unprecedented. In other words, it's happened before. The public discovered similar practices in the mortgage securities fraud leading up to the global financial crisis and in the manipulation of the London interbank offered rate, LIBOR, the interest rate at which banks lend to one another, uncovered a few years later. The recent sharp rise in gold prices may put pressure on these banks and lead to instability in any price-fixing arrangement. If the cartel unwinds, it could come quickly and violently. There would be winners and losers and potential contagion into other markets. In other words, gold derivatives may become the epicenter of the next financial crisis. In such an event, demand for physical gold would spike further, as would prices.
Okay, they're talking about gold derivatives, and usually people just think of futures contracts, but there's futures, forwards, leases, and then there's GLD and SLV and other exchange traded funds that don't actually have all the gold that they say they do. And even if
it's fiat, it's fiat for precious metals. It's all this naked short selling, highly illegal shit, fraudulent. The SEC's asleep, CFTC's asleep, and when the big guys get caught, it's just they just pay the traffic fine and yeah, see you later, fella. We're gonna go back to business.
they did, you can short these instruments, meaning that your broker, if your account is margin enabled, your broker can go into your account and take shares of GLD or SLV or whatever, which is supposedly backed by physical gold. So you got an ounce of gold here. They take those shares that represent that ounce of gold, loan them to somebody else who sells them into the market, and that person that was sold to thinks that he owns that ounce of gold. So two people own the same ounce. If you can
rehypothecation, it's double counting on people's asset ledgers. Not only people are doing this, institutions and governments. Not to mention the central fucking banks. Oh, God, this is great.
Short it, it's a derivative, basically, of gold. It isn't physical gold if two people can own the same ounce. And the problem with the whole derivatives market is that you've got there's, I believe, more than 3 ounces currently, or 3 people that think they own the same ounce on the COMEX.
Double counting.
But then there's other exchanges around the world, and there's an over-the-counter market that we don't know too much about, and there's then derivatives. A lot of derivatives are over-the-counter derivatives, where it's very, very opaque. A lot of the gold market, some of the information that I've been covering in my previous videos here, Swiss Gold, they report everything. They're very, very transparent. When you look at where they got their gold, a lot of times, there was the United Arab Emirates. Big refineries and an exchange there, completely opaque, no numbers from them. So there's a lot of areas in the world where we can't see what's going on. And then central bank shenanigans is usually
This is where I wish I could have a talk with Mike, because look, this is why tokenization, again, is so important. So we know where all the gold is and who's backing what at any point in time. You can just check the tape, check the chain, figure it out. This reduces all of the fraudulent activity and all these dark money networks and how they fundraise off of it.
Shrouded in secrecy. And the only reason for secrecy is if you're doing something that might be perceived as being illegal or wrong or incorrect or scary.
Anonymous blockchains. Welcome. Hey, I would love to tell you all about it, man. Welcome to the shady world of crypto.
The public for some reason. They want to keep it quiet. So
the child sex
these
slavery
derivatives. Now, you remember the crisis of 2008 was caused by mortgage-backed securities, MBSs, and collateralized debt obligations, CDOs.
This is where I wish I could like input that Margot Robbie scene from Big Short. You know the one.
Okay, what's a mortgage-backed security? They've securitized.
It's 7-day-old halibut.
Houses, homes backing that mortgage-backed security. Imagine if there were 3 mortgage-backed securities with the same homes, the same mortgage.
Yeah, Anthony Bourdain, he explained it pretty well, okay, so, say you run a restaurant, you got some, halibut, but it's about ready to turn, so what do? You don't throw it away, because that's losing money. You just chop it up, throw it in a stew, and hey, it's not 7-day-old halibut, it's a whole new thing!
Just in them. That is what you have with precious metals and with silver.
So a CDO is dog shit, and a synthetic CDO is dog shit wrapped in cat shit. Ding, ding, ding.
It's a whole lot worse than gold. They resell the same ounces over and over and over again. So, I've been talking about this for years, as have many others, and I expected
Margin call has entered the chat.
This whole charade to come to an end much sooner than this, but it looks like there has been a short squeeze that has begun here, and that there's shenanigans that has gone on with the central banks.
Evil shenanigans.
So we'll get into that in this video. I don't want to just dominate this with my reaction to this one thing.
Come on, buddy.
Yes, this can bring down the entire world financial system, even though it's a smaller market than mortgage-backed securities or...
Let it burn! Let the fucker burn! Let it burn! We got a replacement, people. We got the means of exchange, the method of payment, and the unit of accounts. All the gold's flying back here because, the Doge boys are going to be knocking on that fucking door. They're just saying Jerome's going to be, he's going to take a shit. He's not going to know what to do. It's going to be hilarious.
Or than the real estate market was of 2006 and 7. It's so highly leveraged that it really can cause banks and brokerage houses to fail and the entire world monetary system to have some major calamity.
Absolutely,
yes!
Absolutely. And the whole effect of all these derivatives, as you alluded to, is to artificially inflate the supply. So the market kind of trades as if there's a lot more gold and silver than really exists. And when it starts to unwind, we get better price discovery.
And the audit's coming here real soon, people. And this is going to be just fun. It's hilarious. All this gold's been flying back, right? It would be funny if they just, miss it by a couple tons or so, and then that's what triggers, like, the whole tokenization effort going underway. It'll just light a fire underneath the legislative branch, to get the stablecoin bills passed, to get these tokenization laws done in the books, ready to go, so everybody can track what the fuck is going on here in all of these markets. Doesn't matter if it's a stock market or metals or futures, commodities, anything. Okay, because that is how pervasive the fraud is. All of these horrible actors that are just taking our fucking wealth, man. Just, of course they expect us to just keep paying taxes. Here's $5,000, all right? Just, turn a blind eye for a little bit. No, man, I want the thing gone, okay? And I think everybody else does too. But let's keep listening about the fucking impending collapse.
And the supply and demand dynamics reflect a fairer price, a higher price.
Well, where it says in such an event, demand for physical gold would spike further, as would prices, it doesn't say that the price of paper gold, all of these promises to pay gold that don't have gold behind them, will collapse to zero, just like mortgage-backed securities did.
Mm-hmm.
Mortgage-backed securities had real homes behind them. There was, and yet they went to zero. You couldn't sell these things for anything. Well, imagine a paper contract where it's suspected that 3 or 5 or 7 of the same ounces have been sold to, or the same ounces have been sold to numerous people. And so if
Who owns
you
what?
think that you're buying a contract where it may not get delivered into, that contract is suddenly worth.
It's fucking musical chairs, man. Whoever's not sitting down at the end, okay, you gotta walk off the cliff, fella. God, I love this. I love this shit so much.
Exactly.
The huge ass covering that's
All
going
right,
on
well,
here.
as a sort of anchor point for our video today, I found a great thread by Bob Coleman. He's got 9 tweets here. We're not going to look at all of them, but we're going to look at most of them. So he says, number 1, the biggest buyers of physical gold and silver right now are the banks who are involved in the precious metals, derivatives, and trading markets.
You got to think, too, the banks, they're $500 billion in unrealized losses. So they got to add some assets to their balance sheet, which could undergo a revalue, which, you know, that's what even Glenn was talking about. That's what, you know, Trump's getting there with his rhetoric, but we're going to have to revalue up from $40 an ounce, they said it was, all the way up to what the market value is now. It's going to add a lot of value to the balance sheet, which makes the banks look better, okay? Makes the banks look better, but it adds stability into the system. But that's the point here, is how do we know who's got what gold? You got to get that QR stamp, you know, right into the fucking smelt of the bar and shit, and, you know, now we know who's got what.
Are growing risks of default or failures imminent?
Yes.
Yes. Yes, they are. Okay.
If they don't revalue. So it's looking like that's what the play is here for the banks.
Let's see what Bob says. He's got some charts, some data. Below is a report from the OCC, the Office of the Comptroller of the Currency. They compile a quarterly report on banks involved in derivative trading. Amazingly, four large U.S. banks held 88% of the total banking industry notional amount of derivatives. These derivative notional amounts increased in the third quarter of 2024 by $10 trillion, or 5.2%, up to $218 trillion.
Right. Well, there's a lot of currency to be made if you can sell the same ounce of money 3 or 4 times, and that's what they are issuing these derivatives, and they've always got a backstop because they can always go to the Federal Reserve and lease gold. And I believe that is what we are seeing, is this scramble to return leased gold before an audit. I believe the reason that this started back in December or early January is somebody sort of caught wind that Trump might be going to authorize an audit of, well, they keep on saying Fort Knox. They have to audit all the U.S. gold. Fort Knox, that's just like a token audit. It would be stupid idiotic if they don't audit. The Fed is where the gold is missing. It's the Fed's basement. Their vaults 5 floors underneath the New York Fed. So go ahead.
Yeah, exactly. I do think you're right. I mean, the timing is beyond suspicious. So I think
Right.
the two are connected. But this $218 trillion number, I mean, this is so large. I was trying to wrap my head around it, and I think our audience would struggle to do that as well. So I looked up a company for scale.
It's hilarious. Once all that shit gets tokenized, it's got to transfer somehow. Huh?
McDonald's, the entire market cap of McDonald's is 218 billion with a B. And this is the whole company. It's not like one location or one country worth of their restaurants. I mean, this is the entire company market cap, 218 billion with a B.
Right. So you're talking about McDonald's in China, and they used to have them in Russia and everywhere. I mean, I've traveled, and you see McDonald's everywhere you go. If it's if it's 1,000 times the size of McDonald's, everybody has to imagine their town with 1,000 times more McDonald's in it. There would be a McDonald's next door to your house.
Yeah. So this is huge. This number is so staggering. It's hard to wrap your head around it. And that's the
Right.
notional amount of derivatives. That's not even, the value at risk, so to speak. So if there's leverage on top of that, which there is,
Oh,
it can
yeah.
cascade into even much larger numbers and, bankruptcies that are unfathomable in size. So this is math.
Yeah, massive fucking news going on, man. All the chess pieces are lining up for the greatest fucking rug pull of all time. And we got Bitcoin, right there with it. MicroStrategy. Trying to say it's digital gold. It's just nothing, just a fucking meme coin, man. That's it. It's it. Michael Saylor's the face, okay? He wouldn't have sold shit if it was just his face on top of fucking Bitcoin. Now he's the main meme coin bro for it all. People, this is some wild times we're living in. I swear.